Hey traders, Raghee here, and in this recap video, I just have one question. How do you know you've had a good week? Well, I know I've had a good week when I've spent most of the week managing open entries. And that's a really good sign that you're not, number one, just looking for the next new shiny object, that you're keeping an eye on the trades that you have open and you're managing them to make sure you can get every last pip, point, tick out of your trading plan, right? Out of your trading plan. So let's take a look at this market post non-farm payroll here to kick off this recap video. In the premium video, I'll jump into the current management of some trades and a few other things we've got brewing in terms of the energies, and even a look at the bonds, which I haven't done a lot of, but it's at a level now that's making sense. So in terms of what we've been looking at on the market post NFP, and that is, really waiting for the market to react to what is overall must be considered a pretty weak NFP, right? The market was expecting something much better than the 261. In fact, even Whisper numbers had some estimates up at 320, 330. There was some conversation of the unemployment rate being 4.3, so that was a pleasant surprise, but not enough to undo the headline number damage and then that fairly abysmal average hourly earnings print. Now, while we had the U.S. economic event by way of jobs, Canada did too, and that contributed to our trade management as well, as will Apple. Apple ran all the way up, as you can see, to 175. We can see some weakness here on the open. One of the things that I was mentioning in the chat room in the morning, this Friday morning, was, don't make too many big bets against the S&P and the NASDAQ until or unless Apple starts to roll over. And you can see that as the markets initially responded very positively to that weak NFP number, the weakness started to set in. And when Apple starts rolling over, especially for the NAS, so will the rest of this market. So I don't mind the move to the downside because, quite frankly, we don't have any skin in the game at the moment in the NAS. And one of the things I say is the most bullish thing you can be sometimes is a near-term bear, meaning I want a correction on this 480-minute time frame. There's a trade set up on the spreadsheet. Check it out in the members area. And I'm looking for our next opportunity to jump into one of these indexes. We've got that long-term position in the S&P we've been managing. And we've got that long-term position now, well, not longer, but it's the 25th of October. But, when I talk about how do you know you've had a good week or how do you know you've had a good month? Look, we've been managing this December S&P. It's been on a daily, but we've been managing this since 2485. You think I mind one bit staring 90 points, 100 points in the face, even though it took, at this point, over a month. I don't mind that. So do we do some intraday trading? Absolutely. But don't underestimate the power of time and trend. There is a tremendous amount of power in giving a market time when it's moving within the context of a trend. And the Dow, this particular trade, I'm absolutely willing to refire. I'm willing to hop back in again, probably a 480-minute time frame the next time we do. But this entry from 23,205 moving along just nicely, hitting a brand new high, and we'll continue to follow this trend. Now, for traders who worry about, well, what about trend following? What if we get a correction? That's fine. That's usually going to be an opportunity. What if you get a reversal? You're going to know because of the tools that we use, identifying the difference between a retracement or correction and a reversal. So right now, we are continuing to manage a very nice short in New Zealand dollar, Canadian dollar. We're finally accelerating away from our entry that we had at 88.78 and 89.15. We had a couple shots at that. This market was very generous. It gave us 3 different wicks up at that area to get this short. So here we are now down at 88.26. I'd love to see this market break the 8,800 handle before we go into the weekend. It looks like we're catching a bid at 88.20 at the moment, but we would be able to take a profit off at 88.05 if that were the case. Also, many of you that have noticed the 60-minute Euro US. It may not look good. It may look kind of choppy, but it triggered our entry way back here, and we're just kind of taking it day by day as we see this market try to punch up to higher highs. Our initial profit target for this buy, we had a 1675 profit target for this thing, and guess what? Thank you, non-farm payroll. We hit that 1675, so we get to pay ourselves into the weekend and go into the weekend with a break-even stop. That's how you know you've had a good week, right? When you're spending a lot of time managing solid open trades. I'll see you next week.